A lot of property investors are asking the same question right now. After the negative gearing reform, what kind of new property can still benefit from negative gearing? Hi everyone, I'm Len, your trustworthy accountant. According to the 2026-2027 federal budget, from 1st of July 2027, negative gearing will mainly be limited to new builds. The purpose of this reform is to direct tax benefit towards properties that generously added to Australian housing supply. So the key question is not simply whether the property looks new. The real question is, does this property actually add more homes to the market? So what type of properties are more likely to qualify? First, a brand new home built on vacant land. Second, a newly built off-the-plan apartment, a brand new townhouse, or a new apartment. Third, an older property is being demolished and replaced with more dwellings. For example, if one old house is knocked down and replaced with 2 duplex or 3 or 4 townhouses, that may qualify because it increases the number of homes available. But there are also a few situations investors need to be very careful with. For example, normal renovation, cosmetic upgrades, or extensions should not automatically be treated as new builds. Another gray area is granny flats. A granny flat is usually a smaller, self-contained living space attached to or located on the same land as the main home. It may have its own living facilities and may be rented out, but in most cases, it can be sold separately. So whether a granny flat will be treated as an eligible new build under the new negative gearing rules will depend on the final legislation and further guidance. So here is a simple takeaway. In the future, whether a property can continue to benefit from negative gearing will not depend on whether it has been newly renovated or whether the advertisement says brand new. The key test is whether the property genuinely increases housing supply. Before buying, investors should check 3 things. First, has the property previously been sold or used as residential property? Second, does the property increase the number of independent dwellings? Third, can the developer or contract documents clearly support that the property is an eligible new build? And finally, please remember that the final details of this reform still depends on legislation and further guidance. Broad-line cases such as granny flats, dual occupancy projects, and lockdown builds may need further clarifications. So before making an investment decision, always speak with your accountant or tax advisor. Do not rely only on a sales statement saying this is a new property, so it must qualify for negative gearing. At FABC Accounting, we specialize in QBCC compliance and tax planning. We help clients optimize their asset structures and respond to budget changes. If you would like to understand how this reform may affect your situation, feel free to book a consultation with us. Don't forget to click like, save, and follow.